in the impact and fallout of West Asia war now being felt. Moody's has cut India's growth to 6%. The growth projection has been cut to 6%. GDP projection slashed from 6.8% to 6% for 2026-27. This is what Moody said, that the ongoing conflict in West Asia will moderate growth momentum and also raise inflation risks. So let me go across to Hina, who's joining us on the broadcast with more details. Moody's has slashed India's growth projection to 6%, Hina.
Well, absolutely. There are two important points that have been raised by Moody's ratings agency in this particular note that talks about the economic impact on India of the ongoing West Asia war. One, of course, is the GDP that it has talked about. And for the current financial year, the growth projection has been slashed from 6.8%. Now, that's what Moody's expected earlier, but now Moody's expecting that our growth rate is going to be only 6%. Apart from that, according to Moody's, there is a risk to the upside as far as our inflation is concerned, and Moody's is expecting that in the current financial year, inflation could average around 4.8%. Earlier, last year, in fact, it was around 2.4%. So almost double is the inflation number that we are talking about as far as this report is concerned. Now, the reason is the Strait of Hormuz that continues to remain blocked, and nobody really knows for how long this war is going to continue. And this particular region, if you talk about India, then it accounts for about 55% of our crude oil imports and 90% of our LPG supplies. And because of the continued disruption right now, we are seeing this kind of concern coming in for the Indian economic growth. In this report, in fact, Swati, Moody's has also said that prolonged disruptions, particularly LPG shipments due to conflict, will lead to near-term household shortages, something that we have not really seen on the ground. But if it goes on for quite some time, then prolonged household shortages of crucial fuel could become a cause of concern. Higher fuel price is something that we need to brace for, and also transportation costs. Then all of that is going to have a spillover impact on our inflation. As a result, our overall economic growth is likely to be much lower. This is what Moody's has said.
Absolutely. Now, this, talks about the challenges that lie ahead for the government as well, because this was a question that many were asking for. How long, in case of a prolonged war, would the government be able to provide relief? And I'm talking about governments across the world. If the GDP growth has been slashed, Hina, and if there is a risk of the retail inflation rising, then challenging times ahead.
I mentioned that, according to this report also, as of now, the situation is looking under control because the government is also trying to ensure that we are getting our LPG and crude oil tankers via the Strait of Hormuz. It will take care of our immediate requirement. But if this war goes on for quite some time, then there is going to be a big problem. Say, for example, right now, there has been no impact in our petrol and diesel prices, barring the premium petrol prices that have been increased. Commercial LPG prices have gone up, but in the month of April, the domestic LPG prices did not go up. So we are still cushioned at this point in time. But if this war goes on for quite some time, then it will have an impact on our economic aspirations. Till about last financial year, India was the fastest growing major economy, but now this war is going to cast a shadow on our economic growth.
Well, there'll be adverse impact on everyone then. At the moment, the situation is under control, it is contained, but prolonged war could have an adverse impact. Thank you very much, Hina, for getting us the details. With that, we're slipping into a very short break.